Okay, you've marked it.
Nigeria and Singapore jointly agreed to stop double taxation amongst themselves. This is against the backdrop of the Federal Executive Council's approval and authorization. This agreement spells out tax cuts accruable to the two nations in view of income derived from doing business together. The Nigerian authorities believe this will boost existing trade and economic ties between both nations. They are positive prospective investors on the two sides will now know their income tax obligations and incentives.
Actually, we export quite a lot to you, and we want to do more, which is why we're signing this agreement so that our companies avoid double taxation in Singapore, and equally, of course, your companies avoid double taxation here in Nigeria. And as you know, we're working very hard to reposition the Nigerian economy. Won't be relying as much on oil. We do a lot in non-oil, a lot in agriculture, a lot in solid minerals, and I think our business relationship between the two countries is going to develop and to deepen.
For the Singaporean government, this will definitely expand its pool of investment in Nigeria. It says the development will further ease its operations here.
The business Singapore has with Nigeria in terms of trade in goods ranks number 5 in terms of all our partners in sub-Saharan Africa. Trade in services ranks number 3, and our direct stock of investments here in Nigeria has topped 2.34 billion Singapore dollars, which is a cumulative annual growth rate of 21.9% since 2010. We expect this to continue to improve further, especially with companies increasingly looking at opportunities in Africa.
Singapore was selected as a suitable tax partner for Nigeria because it is one of the world's fastest growing economies with an impressive free market economy. Its volume of trade with Nigeria is valued at 846 billion naira, with investments in excess of $908 million. Lara Folayo, TVC News, Abuja.